And when we get chances to deploy the capital, we've always tried to make any entity, whether it was the partnership originally or Berkshire now or Blue Chip Stamps when we owned it or even Diversified Retailing, we wanted them all to be compounding, in effect, be compounding machines. That's why people gave us capital. That's why we put our own capital in.
When it comes to achieving true financial independence through passive income, nothing quite matches the allure of living off dividends. While there are alternative options for generating passive income, such as owning real estate properties, self-publishing a book, or starting a blog, none of them require as little effort to maintain as the steady flow of dividend distributions from your investment portfolio. Dividend investing is a great way to make money while you sleep. It provides regular dividends into your brokerage or bank account, adding to your income every month or quarter. Even if you don't rely solely on dividends for your livelihood, the additional income they provide can make a significant difference in your life. It can empower you to transition into a career that brings joy or enable you to work part-time while spending time with loved ones or pursuing personal passions. However, the most significant obstacle to living off dividends is the substantial amount of capital required to achieve this goal. Lots of YouTube videos suggest that you need at least $1 million in savings to retire early. Various financial and business websites offer even more daunting recommendations, from $1.6 million to $3.5 million invested in your stock portfolio. It's no surprise that many people are discouraged after reading these depressing articles and watching the videos, feeling that early retirement is a privilege reserved only for the ultra-wealthy. But now, I'd like to share a different point of view. There is a method that allows a considerably larger number of individuals to live off dividends without requiring $1 million investment or waiting until their elderly years. Now, let's consider a practical example. Assuming you aim to live off $4,000 per month, although the actual amount needed can vary depending on your specific circumstances and your expected living conditions. We'll use the popular Johnson & Johnson as an example. According to Seeking Alpha, Johnson & Johnson is currently trading at $158.05 per share, with a dividend yield of approximately 3.01%. It pays a quarterly dividend of $1.19 per share. If our goal is to generate $4,000 per month or $12,000 per quarter, we can calculate the number of shares needed by dividing $12,000 by $1.19. This gives us approximately 10,084 shares of Johnson & Johnson. To acquire these shares, we would need to invest a total of $1,593,776.20, considering the share price of $158.05. Realistically, the strategy of investing in dividend stocks suggests that over time, investments will grow and provide a nest egg, but there are downsides, such as the waiting period involved. This approach is unlikely to be adopted by most people. Indeed, relying on a single stock like Johnson & Johnson for dividend growth investments often requires an extensive waiting period. The assumption that a stock will consistently increase its dividend every year for decades is not always guaranteed, especially when the initial yield is relatively low, such as with Johnson & Johnson's 3.01% yield. Many people lose motivation during this lengthy process. While this investment strategy is not inherently flawed and can lead to substantial wealth accumulation over time, it may not be ideal for those seeking early retirement and living off dividends due to the considerable time and investment required. Let's analyze how many years we'll need to wait for a $4,000 monthly dividend if we start with small money in a tax-free account, such as a $10,000 investment in Johnson & Johnson with dividend reinvesting. Assuming J&J's dividend yield is 3.01%, the annual dividend growth rate is 6%, and the annual share price appreciation rate is 8%, it will take 69 years for the portfolio to grow for a monthly income of $4,000 or a quarterly dividend of $12,000. Any online compound dividend calculator may be used to quickly compute your own estimation. Considering the significant length of time it takes to get enough shares of a stock like Johnson & Johnson, it's logical to explore higher-yielding investments. Let's examine another popular stock, W.P. Carey. WPC is one of the largest diversified net lease REITs. WPC currently offers a dividend yield of 6.09%, which is higher than many consumer staple stocks. If we aim for $4,000 per month, $12,000 per quarter, we divide that by $1.07, the current quarterly dividend. This calculation reveals that we need to own approximately 11,214 shares of WPC to generate the desired income. At the current share price of $71, this amounts to a total investment of $796,194. Although this is still a substantial sum, it is more attainable compared to Johnson & Johnson's $1.6 million. However, it may still be challenging for most individuals to accumulate this amount quickly in their lifetime. Altria, ticker symbol MO, is an American company that manufactures and sells cigarettes, tobacco, vape products, and alcohol. Currently, it offers a massive dividend yield of 8.42% and pays dividends on a quarterly basis, with a current payout of 94 cents per share. To generate $4,000 per month or $12,000 per quarter, you would need to own approximately 12,765 shares of Altria at the current share price of $45.09. This translates to a total investment of $575,573.02. It becomes much more achievable for a larger number of people if they remain dedicated to investing in this stock and commit to reinvesting the dividends. With discipline and a long-term perspective, many individuals could potentially achieve $4,000 per month in passive income at some point in their lives, particularly if they start investing early. Again, let's take a look at how many years we'll need to wait for a $4,000 monthly dividend if we start with $10,000 in a tax-free account, invest in MO with dividend reinvesting. Assuming MO's dividend yield is 8.42%, the annual dividend growth rate is 4.5%, and the annual share price appreciation rate is 2%. It will take 26 years for the portfolio to grow for a monthly income of $4,000 or a quarterly dividend of $12,000. Diversifying investment portfolios is crucial to mitigate the risks associated with relying on a single company for dividend income. Depending solely on one company for your livelihood is not advisable, as any significant dividend cut or adverse event could have a severe impact on your income. While it's important to invest in several different companies, it's challenging to find stocks with dividend yields. One option is covered call ETFs. These investments have gained popularity recently and employ a covered call investment strategy. The ETF buys a basket of stocks and sells call options corresponding to those stocks. The premiums from selling these options are passed on to investors in the form of dividends, resulting in high dividend yields. The most popular covered call ETF is QYLD, which currently boasts an 11.47% dividend yield. The other popular option JEPI also uses covered calls and used to hold equity-linked notes for stability. Comparing the ETFs, QYLD offers high dividend yield but has performed relatively lower in terms of share price appreciation. On the other hand, JEPI exhibits better long-term price appreciation. To determine the required investment for a $4,000 monthly income, let's consider JEPI first. If we divide $4,000 by the fund's last monthly dividend of 37 cents, we get approximately 10,810 shares. Multiplying this by the share price of $54.41, we arrive at $588,172. It's important that it is spread across a diversified ETF and not concentrated in a single company. If we start with $10,000 in a tax-free account, investing in JEPI with dividend reinvesting strategy. Assuming JEPI's dividend yield is 11.45%, a conservative assumption of the annual dividend growth rate could possibly be around 3%, and the annual share price appreciation rate is expected to be 1%, it will take around 23 years for the portfolio to grow to generate a monthly income of $4,000. Indeed, investing in covered call ETFs like QYLD or JEPI can make living off dividends more feasible and achievable compared to relying solely on individual stocks like Johnson & Johnson. By dividing the expected monthly income of $4,000 by QYLD's last monthly dividend of 17 cents, we arrive at approximately 23,529 shares. Multiplying this by the current share price of $17.73, we find that an investment of $417,169 would be needed to generate $4,000 in monthly dividends. The math tells us that the quickest way to establish such a portfolio is to get as many shares as possible. A high initial dividend yield is usually desirable, but an ordinary dividend growth rate is sufficient. But we don't want the share price to rise too much each year since it will limit our capacity to acquire new shares. Fortunately, the price of these types of ETFs is relatively flat. And finally, don't be afraid to purchase more shares while the share price is down. However, it's important to note that you don't necessarily need to invest the full amount up front. Reinvesting dividends over time can allow for the snowball effect, where your investment grows and generates more income. Investing in covered call ETFs, along with other stocks, can provide a more feasible path to generating high monthly dividends compared to alternative income-generating endeavors. It may also carry some additional risks and potentially result in higher taxes. The benefits they offer, including high dividend yields and monthly payouts, make them an appealing option for those seeking earlier financial freedom. Regardless of investing strategy, the key is to get started as soon as possible. The earlier you begin investing in dividend stocks or ETFs, the closer you'll be to building a substantial nest egg that can provide reliable income in the future.
We appreciate your watching. Please hit the like button below if this video helped you in any way, and don't forget to subscribe to the channel. Thanks again and see you next time.